Welcome back, investors, to Ticker Time News. I'm Adam, and thank you for joining me for the After Hour show. I am glad you are here. I am not so glad that what the market did today, but hopefully you were protected and you got some of the ETNs and you were able to make some money in this down market. So I'll bring those up again during today's show to show you how to make money in a down market, because I don't think the pain's over in this market. And I think for the year, it's going to be a sideways move in the market. And I don't think it's going to produce much when we get to the end of the year. I mean, the indices are lowest point, the S&P 500 especially, its lowest point since October of last year. So it's done nothing but gone down all year long. And I want to show you how you can make money using a simple ETN. It's very easy. It's just like buying an ETF, right? And there are many of them out there, so you don't have to go with the ones that I show you. So here we are, S&P 500, and it is finally the wick. It hasn't closed yet in our yellow box, but the wick got down to our yellow box today, and the candle closed right there on 4,300, 4.77 points above that, but it's on that 4,300 line. Only 100 points to go until we get to the target that I set back on this red circle here on the chart. This will be back on January 18th. I said we were going to 4,200, and we're almost there. We almost did it on January the 24th, but we had a nice rebound after that big fall earlier in the day on January the 24th. So here we are down at 43.04 for the S&P 500. Now, for today, and remember, before I get too far into this, the most important thing is your questions. That's the whole reason I'm doing this live stream, is to answer your questions. So if you do have a question, leave the ticker symbol in your question in the comments, and we'll go over it live during the show. So just remember that right up front. That's why we're here. Okay. Everything else I have to say is just filling time for your questions. All right. So all three major stock indexes did decline today. I should say all four, really. The Dow fell 483 points, and both the S&P 500 and the NASDAQ 100 both declined more than 1%. The Russell 2000, it fell 1.5% as tensions between Russia and Ukraine escalated. And of course, the U.S. President Biden said that he believes it is the beginning of Russia's invasion into Ukraine, and announced that the U.S. is implementing sanctions on Russian financial firms, sovereign debt, and individuals, right? All that transpired before the market opened. Yet the futures market recovered losses, and the S&P 500 actually briefly turned positive earlier, or I should say late morning, in the market today. But buyers lacked resolve, though, giving away to a broad-based decline and losses in all 11 S&P 500 sectors. The consumer discretionary was the biggest loser, down 3%. Easy. Oh my goodness. The majority of the reason why it fell so far was because of Home Depot, ticker symbol HD. Let me get my cursor on the right. Oh my goodness. HD is the ticker symbol for Home Depot. Now, Home Depot had strong earnings, but weak guidance. Weak guidance. Look at this. It fell 8.85%. It got below, oh, excuse me there. It got below $320 a share. And during the Catalyst Watch video from yesterday evening that I did, I said, if Home Depot gets below $320, that's when you start looking at the stock. If it gets sub 300, that's when you start looking for buying opportunities. And here we are, $316.75, just a very small bounce, very small. Don't even call it a bounce. We'll just call it a wash. It's even in the after hours. But look at this. It fell. It's almost down to our price target. This orange line right here, this orange dotted line, It says alert HD crossing $300, and it's got 30 cents on there, but just say $300, right? When it crosses that, below that, that's when Home Depot is active to buy. So, watching that closely, that alert has been there for months. And of course, it's gotten nowhere near that. But we are finally starting to potentially get close to that. Now, they had a beat on their earnings. So, EPS $3.21. The estimate was $3.18. Revenue was $35.7 billion, and the estimate was $34.8 billion. So they beat on that. This downfall, this 8%, nearly 9% downfall, was all due to guidance. It looks in the home improvement sector, it looks like it's coming down. Sales are stalling. Home Depot doesn't think that there's going to be many sales going into the rest of this year, especially the second half of this year. People are just going to start getting priced out of everything, right? First-time home buyers are going to get priced out of buying homes. And then people who own homes are going to get priced out of remodeling those homes because prices just continue to go up. So there's going to be no room at all for sales in anything in the second half of this year. And that's why I don't think the stock market's going anywhere. And that's why I'm betting against it, right? Okay. Moving on from Home Depot, because that was a big spill there, right? Lowe's reports tomorrow. So depending on what Lowe's says too, ticker symbol LOW for Lowe's. Lowe's is another, it's Home Depot's competitor. Lowe's was down 3.6% today because of the Home Depot news. But what will Lowe's say? Will Lowe's echo what Home Depot said? I really am very interested in hearing and reading about Lowe's tomorrow when they report their earnings. Can they be echoing Home Depot? Can they, or do they see something different? It's going to be very interesting. Okay, so bad guidance is what hurt Home Depot and also brought down Lowe's today. Okay, the utility sector, it outperformed in I guess, a relative basis, right? It declined 0.1%, and yeah, being down, it was still outperforming. Amid the geopolitical uncertainty and the slower growth prospects highlighted by, of course, Home Depot in their guidance, investors remained concerned about the impacts of the Fed tightening. What are they going to do? The 10-year yield today increased 2 basis points to 1.93% despite the geopolitical tensions, supporting the case that the market was influenced by more than just Russia and Ukraine. Granted, now, the market did come off session lows in the afternoon after President Biden did announce new sanctions on Russia. The S&P 500 jumped nearly 70 points off of its lows in the course of 1 hour. But sellers came back in to spoil any rebound hope for today. The S&P 500, let me pull it back up. SPX is the ticker I use in TradingView. There is a link in the description for a free account to TradingView. If we look here at the S&P 500 and this last candle for today, right? The S&P 500 closed today 4304. It is down 10.3% from its record closing high. And this is the lowest level since October the 4th. October the 4th. If you would have bought in an S&P 500 index on October 4th, right now you would be breaking even, on the verge of potentially losing. Okay. So here's where we stand year to date. Dow Jones is leading the way, down 7.5%. The S&P 500 is knocking on the door of a technical correction down 9.7% year to date, and a technical correction is at 10%. You have to be off of your highs by 10% for there to be a technical correction, all right? 9.7%. We get to 20%, that's when you're technically in a bear market, all right? Now, the Russell 2000 and the NASDAQ, they are in correction territory. The Russell 2000 is down 11.8% year to date. And the NASDAQ tech stocks have been hammered the hardest because their valuations were the highest. They are down 14.5%. 14.5% for the NASDAQ, down year to date. It is 5.5% away from a technical bear market. The NASDAQ, 5.5 points away, 5.5% away from a technical bear market, right? If we look here at the NDX, that is the NASDAQ 100. Look at this. If we measure, right? I'm going to get the measuring stick out here, and I'm going to go from this high right here, right? This will be 16,597 as the high. And if we go down to where it closed right now, that measurement is a 16.48%, right? Now, that is going from the opening high to the closing low. That's not technically how you measure it. You would need to go from the close right here, which is just a percent or two away from where we are right now. But I went all the way to the very top to the very bottom where we are today to measure that distance to show you 16.48%. So we don't have to get much lower with the NASDAQ for this. Look at this. I'm going to go again from this high right here, which was an open, not a close. And I'm going to go down to 20%, because that's when you would technically be in a bear market. And there it is right there. That's right about 13,279. 13,279, give or take a few points there. And that's when we are technically in a bear market for the NASDAQ. And if I measure from where we closed today down to get as close to that point there as possible, 79, can I get to it? Oh, all right, come on. 79. How close can I get to there? Oh, I just passed it. 4.2%. The NASDAQ needs to fall 4.2% before the NASDAQ is technically in a bear market. Okay. Oops. Sorry, I bumped that. All right, so let's look at some things here. If the NASDAQ, the S&P 500, the Dow, they all fall, right? Where can we go to make some money, right? Well, you can use ETNs, which are an inverse of the Dow Jones, the S&P 500, or the NASDAQ, right? Okay, so let's go look at the S&P 500 first. SPXS, okay? Now, this is a leveraged account, meaning it moves faster, okay? It moves faster than a normal one would, right? So this was up 3.1% today. At its max, it was up much more than that, but that's where it opened and closed, up 3.1%. And here's the ticker symbol right here on the screen. SPXS is the ticker symbol. It is leveraged 3 times, right? So as the as the S&P 500 goes down by 1 percentage point, this goes up by 3 percentage points. Okay? So it's leveraged 3 times. This is what I have been using this year as the S&P 500 has fallen. Now, for the Dow Jones, I've been using SDOW, D-O-W, okay? SDOW. This was up 4.42% today. The ticker symbol is right here on the screen in the green, SDOW. As the Dow Jones falls, this goes up, all right? These are all in the inverse, right? Meaning they are upside down and move in the opposite direction of the indice that they are tracking, okay? So the first one I showed you was for the S&P 500. This is for the Dow Jones. Now, for the small caps, the Russell 2000, I have been using TZA. TZA. This is also leveraged 3 times. So as small caps go down by 1%, the Russell 2000, this goes up by 3 points, 3%. This was up 4.2% today. Now, you must be very careful when using these because they can lose you a lot of money if you're not paying attention. You have got to be paying direct attention to the market to be able to use these successfully. All right. Now we go for the NASDAQ. It is TECS. All right. It is also leveraged 3 times. All right. TECS. This is for the NASDAQ, right? The NASDAQ 100. And this was up 2.8% today. Okay. So these are ETNs that I'm using. So as the market goes down, make some money. All right. Just want to point those out there to you because I do think there's more pain in the market and these can definitely help you out. And if you just want to pick one to go with, I'd go with the S&P 500 because that's very closely watched, right? Or the Dow. The Dow, either or, right? When this market does want to bounce, it's usually the tech sector or small caps that are moving at a greater percentage rate. So if you get into one of these and then the market flips off of some crazy headline that says, Russia withdraws and everything's all good, they shake hands and have a peace party, right? Crazy headlines like that will move the markets in big ways. So you don't want to be upside down in one of these leveraged accounts. So I just want to point that out to you. But they are a great way to make money in a down market. All right, let's look at Bitcoin. BTC/USD on TradingView. Now, last time I checked, it was doing pretty good. Yep, up 2.3%. It's up to 37,928 at the moment. 37,928. Now, today it did get as low as 36,368. The cryptoverse has just been falling for the past several days, nearly a week now. And today we finally get a little action. Now, I do find it very interesting. If you notice on the chart here, there is a new technical indicator on the screen here for you, and it's this blue, weird looking, like small intestine thing going with the candles. These are called Bollinger Bands, right? If you go in the trading view and you click on this box right here, indicators, metrics, and strategies, you click on that and then you type in Bollinger Bands and you'll get a bunch of options. what this shows you is basically, in very simple terms, it's showing you one deviation away from the center, okay? And it does a pretty good job. If you notice here on Bitcoin, it does a really good job of, staying right here within these candle moves. Like when Bitcoin's going up, the band is like riding right on top of those candles. And then when it's going down, that bottom band is like riding right on the candles. It makes a reversal, and then again, it's riding right along the candles. So this is a very interesting tool to use to find tops and bottoms, to see where the momentum is and where it's not. And it's very interesting that Bitcoin dropped right on to this bottom Bollinger Band here and then decided to rebound. Now, it's rebounding, right, after this big fall right here. And look at the RSI, which is right underneath the volume here. RSI has been going down, right? It started here on February the 9th, and it's just been going down ever since. Same thing here with the money flow. We peaked on February 9th and 10th, got a sell signal there, and then we kind of went flat. We made a little U handle here, maybe like a cup and handle signal, right? Right there. And then it, starting on February 16th, it's just been falling. So both of these relative strength, money flow, have been falling. But yet we bounced right here, right on the bottom of the Bollinger Band. That is very, very interesting indeed. So it's just a new indicator that I'll be showing from time to time on the screen. I like it. Um, I've been using it, just haven't had it up on the screen because I don't want to make the screen all cluttered and hard to tell what's going on. But it's very helpful to see where the upper bands are, the lower bands are, and it just gives you a good indicator of where things might be going. Now, it's not perfect. I mean, look here on January the 29th. It's hard to see because the volume candles are in there, but it slipped out the bottom of the band here and closed down below the lower band, so it can slip. And then the flash crash that we had on December the 4th, I mean, yeah, I mean, it went way out of the bands there. So that's why you see that there. All right, so that's Bitcoin 2.44 right now. Ethereum ETHUSD. All right, here we go for Ethereum. And it's also bouncing up 1.78% to 2614 right now. So that's a nice little bounce there. Nice little curve here on the RSI as well. Volume has picked up over the past 2 days. So it's looking all right. But I do think right now, Bitcoin, Ethereum, all of them. Let me put Bitcoin back up here just for a moment so I can show you this. And I'm going to put it up here like this. And let's see if I'm going to hide the those blue bands there. And I'm going to put this other line on here. Okay. All right. So this is showing you. Oh, hold on. Hold on, that's not right. Okay, hold on. That was the wrong thing to do there. Okay. Now, I just did, and what this is showing you, I just did Bitcoin and I divided it by the S&P 500. And the reason I wanted to do that is to show you that right now, I mean, this looks almost identical. Right now, Bitcoin is up above the S&P 500 by 8.82 points, all right, or 3.4%. And that's because Bitcoin was up by 2.5% or so, and the S&P 500 was down by 1%. You add those together, and you get 3.4, 3.5%. This is showing you how the stock market, at least the S&P 500, is moving with Bitcoin, or I should say that Bitcoin is moving with the S&P 500. So it's a very interesting little experiment to run, and then you can see how far things have been off in the past with some of these bigger moves. 11% difference, right? Even on the flash crash there, it was only 8.3% difference because it closed not at the very bottom of that. So I just want to show that to you. I think it's an interesting thing to watch there. All right, let's talk about the main event. Okay, the main event, and that's SoFi. We got to talk about SoFi. SoFi today down 9. This is call it 10%. SoFi was down 10% today. It's up 1% in the after hours, which is good. I think I like SoFi. I'm bullish on SoFi. I understand it falling down to $10 a share. I understand that. I get that. I've just been dollar cost averaging as it falls because I believe in the long-term prospect of SoFi. And when we're looking at companies like SoFi or Lucid or Enphase, any of these more younger speculative companies, right? We have to understand that the risk of these companies and the share price going down significantly is always a possibility. There's always a possibility when you're looking at speculative stocks, growth stocks. Not all growth stocks are speculative, though. But when you're looking at the speculative stocks, there's always a possibility that they go to the moon and then they come back to Earth. I mean, look at SoFi. SoFi has gone to the moon 3 different times. And each time it has gone to the moon, it has always returned back to Earth. Always. And now SoFi is not just returned back to Earth, but now SoFi is drilling to the core of the Earth, right? But that's okay with speculative stocks, and that's a risk that investors are taking when investing in speculative stocks. That's why it's important that if you buy in at the top, or we don't know, we could be buying in close to the top. We don't know when the top's necessarily going to be. I mean, sure, we can use technical analysis to try to, increase our probability of knowing when we're at a top, but the same thing is true for a bottom. We don't necessarily know when a bottom is, but we can increase the probability of it not going lower. And we've kind of been there over the past couple of weeks. We got to a low on January the 28th of $10.51, almost to where we got today. On Friday, SoFi was down 6.4%. It got to a low of $11.17. So today's move, though, I don't think was a reflection of a speculative stock. I think it was a dilution. Stocks were diluted. And according to my math, stocks were diluted by about 10%. And SoFi is down about 10% during regular session. It's up 1% in after hours. I think today investors are just not reacting very nicely towards the news that SoFi had released news about an agreement to purchase, and I may be butchering the name of this company, Technisys, for 84 million shares of SoFi stock. 84 million shares of SoFi stock is right about $1.1 billion. SoFi is buying another company for $1.1 billion. Now, the online lending, investing, and personal finance company SoFi expects the acquisition to add a cumulative $500 to $800 million through the end of 2025 at high incremental margins. SoFi anticipates this deal closing in the second quarter of 2022, which isn't that far away. Technisys looks like a good fit for SoFi. The company specializes in a cloud-based banking software for finance companies, typically built on top of inefficient legacy platforms that are sluggish to keep up with competing fintech alternatives. Given that SoFi's core business involves around student loans, its user base caters primarily to younger generations. Therefore, by offering simplistic and robust tools to house various financial accounts, such as banking, loans, credit cards, and investments, all with a clean interface, Technisys keeps up with the expectations of a younger clientele. So they fit together just on that level alone. So why are investors not applauding this merger? Well, first, Technisys their current sales are relatively light, even though the company has been around since 1995. For 2021, the company is on track to generate about $70 million in revenue. SoFi stated that Technisys growth is accelerating, but the prospect of reaching $800 million in cumulative revenue by the end of 2025 may be considered too ambitious. To achieve this goal, Technisys would need to have a growth rate about 40% annually. And based on the company's predicted $70 million in revenue for 2021. Next, SoFi, you're paying too much. Even at a 40% compound annual growth rate, SoFi is still paying around 4.1 times. 4.1 times. 4.1 times fiscal year 25 revenue. SoFi, you're paying too much. So if Technisys can only generate $500 million in total revenue, SoFi would be paying approximately 7.6 times, again, fiscal year 25 revenue. So SoFi, you're paying too much. And lastly, a share-for-share transaction dilutes current shareholders' equity. At 84 million shares, the transaction amounts to about 10% of SoFi's current outstanding share count. And why is the stock down 10% today? That's why. Share dilution. Although this is not a massive slice of SoFi's market cap at $8.2 billion, an all-stock deal signals less confidence by management themselves at SoFi in its ability to achieve synergies, meaning there's certain things that are redundant that they can take away, like you would see with an all-cash deal, which is management saying we can recoup this cash from this company. It also doesn't help that the stock is currently trading at 6.6 times forward sales, a high multiple given the Federal Reserve's hawkish stance. Overall, SoFi's agreement to acquire this cloud-based fintech is being met with skepticism surrounding the merger's details and the ambitious sales target. But still, as SoFi continues to focus on branching out from only offering student loans through a suite of personal finance options, its purchase of Technisys is an excellent step towards capitalizing on becoming a one-stop shop for individuals' financial lives. And I think it will turn out to be a solid fit, but the price may be a little too high, and that's a fact. All right, that's what I think about SoFi's deal to buy Technisys, and I'm sure I'm butchering that name, but it's an odd combination of letters there. They're just paying too much for it and expecting too much in return, but then again, showing investors that we're going to dilute your shares by 10% because we don't believe we can recoup that money. All right. So SoFi is signaling mixed signals there about this deal, but it's still a good fit for the company, and it does help them achieve their long-term goals. I think if the market wasn't where we are now, the stock may have stayed flat on the news or gone up. Because I don't think many investors, well, maybe they do. I don't know the difference between when a company buys another company and they're doing it with an all stock deal versus an all cash deal. An all cash deal is bullish, and management thinks they can recoup that money. That's an investment that they're willing to make. An all stock deal is saying, hey, investors, we don't think we can recoup this money, so we're going to dilute your shares. One shows confidence, and one is a lack of confidence. And I want to make sure investors understand the difference between the two, because SoFi, this is a prime example. All right. So that's what I think there of SoFi and this deal. All right. I am doing these videos a little different than normal. I'm making them a little shorter. I'm only going to focus on a kind of wrap up of the market, right? And then focus on one deep dive. And then the rest of the other deep dives I do, I'm going to release them in single video format just to focus on them. That seems to be what you guys would rather have instead of a live stream like this. So that's what I'm going to do. I'll make the live streams a little bit shorter and then release more independent videos on individual companies. So that way we still have a live stream so you can ask questions when you need to, and when you don't want to, that's fine. You can just watch the videos as they come out. So I think that's what you guys are asking for. So that's what I'm going to do. All right. So this video, we're about 41 minutes into it, so we'll wrap it up right here. All right. Thank you, ladies and gentlemen, so very much for being here with me. I greatly appreciate it. And if you are watching the replay, remember, you can always put a ticker symbol in question in the comments, and we'll go over it during the next live stream. All right. Thank you guys so very much for watching, and I'll see you in the next video.